Greetings, Jedi traders. David here of TradingFibs.com to bring you the index recap, state of the indices for January 7th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market. See what was going through my head on any given today. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, the telltale sign of the week. We are 4 days into the market this week of 2016 and has been all to the red side, all to the bears. As Chinese market opened up last night, overnight, and just sold off, shut down after 30 minutes. That's right, 30 minutes, circuit breakers in place. Now, news today, circuit breakers have been taken away, so it's just a wonder what's going to happen in the market tonight. But let's jump right into the state of the indices today as they all sold off, even with the morning session giving a little bit of a lift. Technical bias all around. We'll take a look here in a little bit, but let's start with the crude here on the left. As market data came out the other day, it was yesterday, Wednesday, with the crude report. As we see price action continuing downslide overnight, rumors of an emergency OPEC meeting, whichever way, trend is trend. We'll take a look at the bigger picture, but here it was, closing out the gap from yesterday, 34.06. We're looking at the market profile here based on time, and then we'll take a look here at the volume profile. Let's jump right into the TF Russell. We could see this week, Monday, Tuesday, Wednesday, downslide. Thursday, here we are closing out 105.73, former gap. Let's see if we have any. That's right, no former gaps, leaving gaps open above, and so that's good business. Good business is closing out unfinished business down below. Open gaps is unfinished business, and then markets can rally. Jumping into the YM here, YM price action closing out two former gaps, 16.456, 379. Let's take a look downside as we see one left in the hole, 15.726. Come and get that. This week would be a present. If we don't get it, we don't get it, but eventually we're going to have to come down and get that. I'll show you that on the bigger picture time frame. NQ closing out 43.2650, establishing today's open gap at 42.8750. We have 42.6250, big number down here, and several lines below before we can rally back upside. But it was all about the ES, all about the ES. That's right, all about the ES today as the market. That's right, the market came down, closed out former open gap 1943, establishing 1932. And we rallied slightly back upside before settling back downside. Let's jump right to the volume profiles. We see crude continue to close out each previous open point of control. TF Russell 1140.3 is the 600-day macro VPOC, as we have a 1025 down here. Again, we saw on the market profile not much room to the downside. Actually, nothing left on market profile on the TF Russell besides today's open gap. What would be the best picture is if market action overnight can somehow open or come down below this, and then we just move back upside, knowing that sometime in the future we don't have to come down and close this again. So let's jump right back into the volume profile. We could see 1025.20 is the number to go catch and close that out. 600-day profile here on the YM. We still have lines downside. NQ also as well. 44.1125 is the 600-day macro VPOC, which we managed to shuffle and settle around yesterday and almost come up and breach again today on the NQ, closing out three former VPOCs. Boy, we are taking care of business. And the ES as well, 1940, today's point of control, and closing out the point of control right above that. A couple numbers down below, and then we could rally back upside. So let's jump right into the technical bias open gaps that we looked at this morning. Yep, 51.44s. We're all bullish. That was the morning move, except for the crude, which has been all bearish. And so pretty much still overall big picture on the swing position was to the bear side. Long-term picture kind of waffling here. We've had a slight switch in some of these. We'll update those for you in the morning, but it's the ES now on a weekly, which is now has switched to the bearish as the bullish neutral has moved to
NQ
crossover
long
downside.
setup.
but I tend to want to wait for the week to close out to change that. But right now we're in the red, so we'll go ahead and change that to bearish.
NQ
As we
long
can
setup.
see, major open gaps we were looking at. We already closed out 1109.04 on the TF Russell,
NQ
but it
long
was looking at
setup.
16302
NQ long
on the
setup.
YM, 4251.75
NQ long
on
setup.
the NQ, and the
NQ
ES
long setup.
1934.5.
NQ long
So
setup.
let's jump right in. Here was the ES. It was all about the ES today, watching in the trading room along with the other
ES long
indices, but
setup.
focusing on the ES today.
NQ long
Here's the
setup.
pre-market big
ES
picture.
long
Again,
setup.
this lining up, these
ES
charts
long
lining
setup.
up with the spreadsheet here. As we could see, the 100 tick range chart, 4-hour charts were to the downside. Everything's down downside. And this right here, we'll show you at the end here how the weekly is now shifted into the red. We've had a crossover here, so a lot more bearish activity flowing to the downside, leaving these open gaps up above. So again, market will come back up like on the ES with all the other indices eventually and close these out. But for right now, business is to the downside. So there it was. That was the ES big picture on the Fibonacci draw. Price action holding under the 200 period moving average with those open gaps. It was all about 1934.50 to see if we can come down and close that out today as the overnight markets, especially with the Chinese market, to the downside. So right there, from the pop, price action nowhere near the overnight low at this point, as price action was out of the gate post 30 post 4 or 5 minutes. Price action on the buy signal upside, all in the green. That's right, all in the green. There was the support at the 50 period moving average. T3 moving average crossover on a higher time frame. This is a 10 tick range chart in comparison to a 5 tick range chart, or a 5-4 flex Renko versus a 10-7 flex Renko. The only concern I had, again, not a setup I took, but what you see here is the AD line. AD line was coming down, so that to me was a little bit of a divergence, and the market internal on the NYSE tick was also not poking above the 200 period. I'm not 200 period, but the 200 mark here, 225. And so while it was a great setup, didn't take it, watched it ran, and hey, you know what? Sometimes you just got to let them go, and there it went. That's right. That's some nice healthy ticks to the upside. Solid Heikin-Ashi bars to indicate the trend. You're all in the green. Hey, sometimes you miss it. What can I say? But by the trading plan, AD line was downside and tick count wasn't moving up too high. Decide to sit it out. But there it is all around. Good trade. Solid trade. Trading members in the live trading room were able to grab some of these, and there she went all the way to the upside. Where to the upside did she go? Well, she came back down. Price action on setup number 1, getting up to value area high, crossover over here on the T3 moving average. AD line finally plateauing. Tick count managed on this drive to get up to 400. Still finding support 50 above 144. The question at this point you got to ask yourself is, where is the reentry? Am I going to be able to get in this if I missed it? And boom, there it was. There was the reentry. Setup number 2 here, post 16 minutes of the market open. Entry on the T3 moving average on the 5-4. AD line is plateauing. Tick count is pushing up around 400. 50 still above 144. Price action pushing upwards. T3 moving average to the upside on 10 tick. There it is. First contract off on trade management, and the next contract is all about the runner. And the runner, first of all, before the runner came being taken out or continuing upside, there it was. It was the fib projection level that was hit here on price action to the upside, as T3 moving averages were still upside, and basic reject right there, fade position, price action, let's see, another reentry, or just simply managing the trade on the way up. Still managing. Stop at break even at this point. You're not worried about it. If it runs, it runs. If it doesn't, it doesn't. So setup number 2, trade taken out. Isn't that a nice reject? Fib projection level placed on the chart. So hey, you know what? Maybe a possible place you could take out all your contracts, or simply just another level to be aware of as price action. Now, possibly could have faded that. Not my type of style of management to enter in a trade on a fade like that. I want to wait for what? I want to wait for the long position again. As why? T3 moving averages 10.70 to the upside. T3 moving averages, the 5144 price action is to the upside, and AD line just kind of waffling here. So again, if I'm looking for a re-entry to the upside, I want to make sure that price action is going to cross over again. So setup number 1, Here we are, setup number 2, price action, first contract off, and second contract taken off on the break even. Here we have setup number 3 to the downside. That's right, we were looking for that price action to break above that fib projection level, which it never did. And so right here, AD line, not being able to move, break upside above the 10-period moving average. Tick count in the deep red, 427. And why the signal here? I know, 51.44 still in the green, but you got price action, got some room to come down here. See if it'll find support here at the 50-period moving average. But you have a crossover here on the 10-tick range chart, which is supporting, that's right, look at that, 1, 2, 3. At least 3 of the charts in the red, and price action coming down. Good entry. Let's see how far she went on setup number 3 to the downside, giving you 1 contract off trade management, and then deciding, hey, you know what? Move the stop to break even or break even plus 2 and take it out on the crossover. Again, price action found support here at the 50. Not a bad trade to come out, even though the AD line is still coming downside. So the question is setup number 4 going to be to the downside or setup number 4 to the upside? And there she went, setup 4 to the upside. Not taking it, making its way back up. Perhaps fib projection level. Here's the value area high. T3 moving average crossing back over on the 10.7. Found that support at the 50 moving average. That's right. We were looking for the price action to come down. It did come down. 1 contract off. 1 stopped at break even plus 2. And there you are, finding support that 50-period moving average, and it moves up. So there's your setup number 4. And there she went right to fib projection. Again, pull back and possible re-entry. Deciding to sit out of this. We're at post 1 hour of market action, finding still support. So the bias, technical bias in the market is still in the green, still to the upside. Again, contrary to what? Contrary mainly to the overnight session. And so it was opportunity after opportunity. I'm showing you this on a bigger time frame, but it was the smaller time frame that offered the opportunities on some small scalping opportunities here as price action on the Heikin Ashi bar, solid bodies, trends up as the AD line was back in the green. T3 moving averages were staying in the green up here. 50 above 144 price action. Look at that tick count up there in the 600s, 700s, and finally on a 5-4 entry right here as market action pulls back, takes out the runner. Another opportunity upside. Boom. Deciding to come out both contracts right up here at Morales level and 61.8 Fibonacci. What a wonderful move to the upside. And so by morning session, here we are with we're already into almost the European close. Good session already, but the question is this market going to rally today or not? And there we are into the European close. Market decides to empty to the downside. There was an entry on a lower time frame here as price action made its way down back to the fib projection level. Why down here? Well, on a smaller time frame, you had a pullback. Big reason is look at this right here, and the price at around 11:22 Eastern Standard Time, you see price action back within the 51.44 zone and unable to break to that upside. And so price action here on a lower time frame offered a small opportunity for a scalp entry, point and a half to the downside. Again, still rejecting here. So at this point, you're looking for price action to continue to the downside. You have a crossover over here. You have price action underneath the 50-period moving average. And so we got 2 in the red, looking for a 3rd in the red, looking for price action to continue to the downside. And there we are, post-European close, offering another opportunity to the downside. T3 moving averages, 51.44 price action now breaking down underneath the under the 144, and look at that, negative 824 on the tick count. Wonderful move to the downside as it broke the fib projection level and continues to move south. And so here we are into the lunchtime hour. At this point, you're asking yourself, I'm looking for, that's right, I don't want to sit in the chop as you see here. You're looking for the all-out, that's right, all-out move that's just going to continue to trend to the downside. Here you have the setup here. About 30 minutes into the lunch hour. What's supporting this move downside? Well, you got a 534 crossover. You have a 10 tick that's in the red, represented by the chart in the upper right-hand corner. You have an AD line in the red. Tick count is not pushing upside, and then there's the reject at the 51.44, and you're seeing the 51.44 crossing over, just about to cross over, which will move this price action to the downside. And so there she goes, south to the downside. 10 tick downside, not able to break upside. 50 crosses the 144, puts you into the entry or looking for a possible pullback entry, and there she went all the way to the downside. Look at that, all in the red. Best move of the day. Even though price action moved to the upside, now we're in sync with the big term picture, the swing position, and in sync more so with the overnight price action, as price action breaking down to at least the negative 700, negative 800, even down to 1,000 here. 51.44 now in the trend with the downside with all the other indices. And so we hear post-lunch setup. Lunchtime is over. Price action breaking to the upside again. The question is, are we coming down lower? And that's all you wanted to see, is you wanted to see a market action to continue lower. Find yourself a re-entry here on a 5-tick range chart. T3 moving averages on the 10-tick range chart are downside. 51.44 is still holding. At this point, what we're looking at is the fib projection level to the downside, as price action actually hit the former VPOC here at 1944.25, but it was all to the downside. So the entry up here, or the re-entry here, the target here was the daily open gap that we've been talking about for so long, for the last 3 months. Again, taking care of downside business, and there she went right to the fib projection level. T3 moving averages and the 51.44 still keeping you in trend with the AD line. All 4 major indices all downside at this point, and bang, right to the daily open gap from October 5th, 2015. And yep, she bounced. That's right, she bounced down here as price action hit that daily open gap, moved to the upside, and here we are at around the 2 o'clock Eastern Standard Time hour. And the question at this point, you have to ask yourself, if you're managing this trade on the way down, you're maybe perhaps moving your stop to the most recent swing size high, or you decide, you know what, I hit my daily open gap, I'm done with the trade. I'll look for a retest. I'll look for a possible, another setup, as we see here, a buy signal to the upside, or you decide, you know what, look, price action's rejecting here at the 50. The T3 moving average, not in my favor right here. So maybe I'll take the sell signal here for a couple ticks to the downside. Or you just say, look, I had a great run to the downside and I'm ready to sit that out. And so there it was. It was that beautiful move right down to the daily open gap, 1934.50. If I may all share with you, that's right, back in November 2nd, that's right, November 2nd, 2015, I wrote an article, "Are stocks set to reverse course? Watch those open gaps." And many investors, I wrote, may not want to hear this, but I think the market will retreat. And there it was, writing about the ES and the other 4 indices, as I saw price action pretty much waffling at the top yet, but knowing that eventually these open gaps that we had in the market were eventually going to be closed out. And so price action did exactly that on the ES today, coming down here, grabbing that 1934.50 and closing it. So the question is, where does the market go from here? Are we going to be able to come back up and close some of these other open gaps? Well, all I'm looking at is intraday session, and here we are. We had another sell signal to the downside as price action broke underneath the daily open gap. What I'm watching is the 51.44 here. I could see price action being rejected consistently at the 50-period moving average. And so that move right there, that sell signal, together with the rejection at the 50, convinces me that's another opportunity to at least get into a scalp entry, or at least to use trade management where you come off at a point and see if you can get a runner. If it doesn't work out, it doesn't work out. You get back into the upside, as we saw retest here of the daily open gap level. Now at this point, T3 moving average crossing over as we go. Price action comes up to the 144. Again, one entry here, another possible entry here, or you just say, you know what, I'm done for the day. I expect perhaps some chop action down here, or you just look for the next setup. And that's what we did pretty much the rest of the session, as price action moved up to the former VPOC, faded off there, set up signal short, makes it for a good entry at a T3 moving average crossover in a higher time frame, plus the reject here at the 144, and you got a tick count at negative 560, which puts you back in to the short at that point. And so price action here, moving down, let's go back a chart. Again, this was at about 3 o'clock. You have the T3 moving averages cross over, and that's what they did. They crossed over, had a little bit of a gap up, bounce up, fade up off right before the fib projection level, which was already hit, the daily gap, which was already closed. Yet another possible sell signal. At this point, we're looking for down targets Perhaps the Globex low, perhaps Morales levels downside at 1926.50. You have a tick count in the red, and here you go. What's supporting the entries to the downside versus these up moves is the consistent reject here at the AD line on a 10-minute chart. You have 10 tick range chart on a T3 moving average downside. You have the reject here first at the 144, the reject at the 50. All right, here was the reject up here, which was prior to this, but here we are at about 319, which is showing the reject here at the 50 period moving average on a 1-minute chart, which consistently showing to the moves to the downside. And so there she went, past the fib projection, past the daily gap, all the way down, boom, right to the Globex low. And there was one wonderful trade towards the end of the session. Price action breaking back to the upside. Why to the upside at this point? Well, price action on the AD line just coming up to the 10. That wasn't the indicator. It was the fact that price action was holding now above the 144. The T3 moving average had crossed over here, and already prior to this was back towards the left of the screen. But here you had a buy signal to the upside. Again, target first contract off, and then moving your stop to break even. And yeah, you hope it will breach above the former VPOC, but it doesn't, and that's price action at the end of the day. It got pretty choppy towards the end of the session. Here we are in the last minutes of the session. Another sell signal to the downside as price action crossed over on the 51 T3 moving average on the higher time frame. Again, a lot of price action inside the 51.44. This isn't what you want to see when we're trending. This is kind of sometimes just stay away, but hey, you got a lot of signals here, kind of just wanting to keep you out. The question is why this signal versus another? Well, you got to, again, take it in stride here. What do you have going on? Here we are at 356. 356, we have a T3 moving average crossover, next bar down, and price action breaking underneath the 50, plus a tick count that's reaching into the deep 5-600s. And there it was, last trade of the day to the downside as price action moved all the way down. Globex low around the target. First contract off, and then Globex low was the next target, or at least on the crossover, and you are out. And the overnight low seemed to be, that was it. We weren't really going down any further for today. So here we are on the TF, price action to the downside as price action is moving downside. The TF Russell had several good opportunities to the downside. Here we are on the TF. One action, two was here, and then third was here towards the afternoon. This was the overnight, actually. All right, so again, this was the overnight session. Bigger picture on the TF Russell. We could see the Chinese market, the other indices moving downwards here. But the best session of the day, again, this is a bigger time frame. This is a 20-tick range chart. Again, there were small pockets of opportunity, but it was the afternoon session that we saw on most of the major indices here. As we could see here on the NQ, again, overnight session offered some great opportunities, but it was the afternoon session that really move that downside movement like we had overnight. Again, you know, similar picture here. Again, this is a bigger time frame, but here you saw the opportunities to the upside here, like we saw in the ES and the TF here to the upside. But it was that shot downside that moved the market down to the lows of the day, especially the Globex lows. We could see the NQ reaching down here as well from the overnight session, and as well here on the YM. And so what do I have squared off here on a bigger time frame? Overnight session offering that opportunity. A lot of traders, you know, is it U.S. trading hours that you can only do this? No. You can't rely on a tick count. You can't rely on a 51, you can't rely on things like the AD line. But again, moving averages, the T3 movie, the 51.44. Look, I got all four in sync here. Puts me in a trade. If I can't find it on the larger time frame, I go to the lower time frame and look for the opportunities for entry on a pullback. And so overnight session, early morning to the downside. Again, there's that U.S. market open to the upside, buy signal to the upside, and then there was that afternoon session to the downside on the sell signal. Again, afternoon session was pretty choppy. Again, a lot of scalping in the afternoon, offered some opportunities, but only on all four charts in sync was the better setups. And so there's your YM, and then crude overnight. And but the trades of the day on the crude were always with all four charts in sync. Everything else a little bit choppy, but there you are, four charts in the green, four charts in the green, four charts in the green. Again, I wouldn't have taken anything to the short on that. Maybe perhaps in the afternoon where you had all four charts, but this was already post-pick close, and so that made for not a bad trade, but not as smooth as the others. And wrapping up with the ES that we were just looking at here, here's a higher time frame. Again, overnight session to the downside. It was that AM session that moved to the upside that had several opportunities. Again, missing that first move, finding the second move to the fib projection and higher, and it was that afternoon session on a re-entry to the downside. And then chop in the afternoon, and then finally a move to the downside. Again, a little challenging here to detect what would be a great setup. So again, you use the state trade management or go to saying, you know what, I'm not going to let my first contract come off at a higher amount. I'm going to take it off at a less amount and see if I can get a runner on that contract. Again, I always come back to the 5144. The 5144 is a great chart to analyze throughout the session to see where is market internals. I use it as a indicator of bullish versus bearish. I also look at where's price stalling on the 50 or the 144. I forgot to draw a square here, but again, you can see how price reaction respects that 50-period moving average and where are the areas of indecision. Here we go, numerous points of here's post-European close. Market doesn't know what to do, and all of a sudden, what did we see? We saw the market tank in the afternoon, and that's right. There it was, the inability to break above that 50-period moving average, and it slides to the downside, supports that move to the downside. Numerous attempts to break back upside. Again, we got down to that daily gap. We closed that out, and market action bounces back up, comes back down. This is tough trading in the afternoon, but again, if you're watching the 5144 in a higher time frame, it is able to manage your trades or watch for your setups on a lower time frame. Here's our volume profile for the ES today. As we saw, price action in the morning rise up, test the upper limits, come back into value area, and then break to the downside through the value area, and then just chisel pretty much down throughout value area low in our developing point of control, where price action pretty much settles around that 1940. A lot of heavier volume at that point of control. So price action came down, retreated back up, or pulled back up to the point of control, faded back down, points comes back up. So something to watch during the day and to keep in mind as price action continued to fade off of that and eventually drop down towards the value area low. There's our ES Big Pick post-market. I said I'd mention the up. There we did. We closed at 1934.50 as mentioned in the article written back in November. We take care of unfinished business below, and that's exactly what we did today. T3 moving averages, 51.44s on bigger time frames. There it is. There's that change on the weekly for the ES. We are now in the red. I'd rather wait till tomorrow to call that a bearish, but looks pretty good right now to call it a bearish as price action, unless we really rebound tomorrow. So I'll go ahead and wait another day, make that call over the weekend. But if we are weekly in the bearish, that's going to continue to support the monthly move down, and I suspect that the daily will also be in the bearish moving into next week. Now, bigger picture doesn't mean that next week's going to be bearish. It just means that we got a lot more to fight to the upside. But again, there it is. There you see those open gaps all the way up above. So let's jump right in and finish up with the long term for the Russell here. As price action, we closed out the daily gaps. We know that already. On the TF Russell, we talked about the open gaps of, where was it? Yep, 1109.4. We closed that out, so we don't have to deal with that anymore. So it's all about Fibonacci targets and open gaps up above now. Again, price action, you can be confident that the market eventually will rally and close these open gaps, but until we reverse that, everything to the downside. Long-term YM on the Fibonacci's, we are pretty much blowing out each of these Fibonacci levels that we had to the upside as we retrace. So there it is, 16,302. You can smell it. It's right there. Price action moving to the downside to close that open gap back from October. Let's jump to the NASDAQ. NASDAQ price action moving to the downside as it comes down to this 42.50, 175. It's right there. It's right there. Yeah, we had an open gap up there. My price action moved up, closed that out. And so that where it was in November. When I wrote that article, I saw price action. I know we chopped for a while, but here we are, 2016, leaving some open gaps all the way up above and coming down and take care of unfinished business. We mentioned here on the ES, closing out that 1934.50, and crude as it makes its way down on the Fibonacci targets. Here we have open gap all the way up. So yeah, crude will one day come back up to that $48. Will around that $40. Will around that $35. But we continue to move down. My projection on crude, if we're going to make it down, we're going to make it down to around 28.22, which is a 261.8 Fibonacci retracement, and that's my call for now. I'm not telling you it's going coming down there, but at least as far as Fibonacci extension, it has a good probability, and that would be the full move. And from there, it can all be upside. All right, so there we are. That was our technical bias. We went ahead and closed out that 1934.50. Glad we closed that out. And from here on, as long as we continue to move downside, hopefully taking care of unfinished business on the other indices, we'll turn this market around eventually and take care of the upside business. That concludes today's insight into the state of the indices and the daily recap. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs, and as always, I leave the crystal ball to the experts. I have no idea what's going to be in the charts tomorrow. I can only trade what's on the charts and in front of me. Have yourselves a good day, a good night, and good trading tomorrow. Last day of the week, first week of the year. Oh my, it's been a week. Have yourselves a Blue Zone day.